Hey everyone, and welcome back to the Deep Dive.
I'm Mark.
And with me today, I have Anna, our market expert.
To take a deep dive into some really interesting research about
Hmm.
small and mid-cap stocks.
You know, those SMIs that everyone's talking about?
That's right. We're going to see if this recent buzz around SMIDs is hype or if they're really poised for a breakout.
After years of kind of lagging behind large cap stocks,
Okay, and before we get into that,
if you're looking for ways to potentially 100x your investment,
with meme coins, check out our friends over at the AI Finance podcast on YouTube.
you can find the link in the description.
Okay.
But back to SMIs.
I mean, who isn't curious about where the market's heading?
Absolutely. Especially since SMIs had such a strong rally in July.
It was a surprising surge after years of underperforming compared to those.
Big name large cap stocks.
Okay, so we've got this July rally that's got everyone's attention.
But is there something more substantial behind it?
What could be driving this potential SMID breakout?
Well, one factor we can't ignore is the Federal Reserve's recent decision to cut interest rates.
This is potentially a big deal for smaller companies.
Because lower rates mean they can borrow money more cheaply,
Right.
freeing up cash to invest in growth.
It's like they suddenly have more fuel to power their engines.
But beyond interest rates,
Are there any other signs?
pointing towards a SMID surge.
Here's where it gets really interesting.
Right now, SMIs are looking very attractive from a valuation perspective.
They're significantly cheaper than large cap stocks,
Okay.
trading at levels we haven't seen since
After the dot-com bubble burst.
in their early 2000s.
And historically, when valuations have been this low,
SMIs have tended to outperform.
so it's like finding a hidden gem at a discount store.
I love a good bargain.
Exactly.
But before we get too carried away,
We also need to be mindful of the uncertainties ahead.
like the upcoming election season.
Right, because elections always seem to shake things up.
So how can investors navigate this potential SMID breakout?
While being aware of the risks.
The key is focusing on quality.
Instead of chasing any and every SMAD stock, we need to be discerning and look for companies with a proven track record of.
Stability and growth.
That's where dividend aristocrats and dividend growers come into play.
Okay, I've heard those terms thrown around.
But honestly,
I could use a refresher.
sure.
What exactly makes these dividend companies so special?
Think of them as the all-star team of the stock market.
Dividend aristocrats and growers have a long and consistent history of increasing their dividends year after year.
This isn't just about handing out extra cash,
It's a sign of their financial strength and resilience.
so they're not just riding a wave.
They're consistently building value.
Exactly. Now, if we zoom in specifically on SME dividend growers,
We find some really compelling advantages.
Right.
They tend to be more financially flexible than their
broader market cap peers,
often carrying less debt and generating higher returns on equity.
this means they're in a stronger position to navigate any economic turbulence.
And speaking of navigating the market,
For those looking for some extra guidance,
don't forget to check out the AI Finance podcast on YouTube.
they break down complex financial concepts
In a way that's easy to understand.
so you can make smarter investment decisions.
But let's get back to these resilient SMID dividend growers.
What else makes them stand out?
Well, another big plus is their potential for earnings growth.
Even with the market uncertainty we talked about,
Right.
these companies are expected to continue growing their earnings.
It's like having the best of both worlds.
Stability and growth potential all wrapped up in one package.
So we've got these SMID dividend growers,
With strong financials
a track record of increasing dividends.
and the potential to keep growing, even when things get rocky.
Sounds pretty compelling.
But is there data to back up these claims?
Absolutely. Our research shows that SMI dividend aristocrats and growers have historically outperformed their respective benchmarks.
With less volatility.
This isn't just about catching a rising tide.
It's about investing in companies that can deliver consistent results regardless of the economic weather.
So they've proven their ability to weather storms.
That's reassuring in today's unpredictable climate.
Precisely. And that's what makes them so compelling right now.
This potential for a SMMI breakout, combined with the stability and growth potential of dividend growers,
Presents a very interesting opportunity for investors.
it really does seem like there's a lot of potential there.
But like with any investment,
We need to be aware of the risks,
okay,
SMMIs by nature,
tend to be more volatile than large cap stocks.
so they can be a bit more of a roller coaster ride.
Exactly. They can be more susceptible to economic downturns.
or challenges within their specific industries.
Yeah.
And remember, quality can vary widely within the SMI segments.
So it's crucial to do your due diligence.
And make sure you're investing in companies with strong fundamentals
A solid track record.
and a clear growth strategy.
Right, so no jumping in blindly.
We need to be selective and make sure we're choosing companies that are built to last.
But how do we actually go about identifying these high-quality SMID companies?
What are the key things to look for?
That's a great question. First and foremost, you want to check their financial health.
Look at their balance sheet
Yeah, income statement. Yeah.
and cash flow
Are
statement.
they making a profit?
Are they growing their revenue and earnings?
Do they have a manageable amount of debt?
These are all crucial signs of financial stability.
So it's like giving them a financial checkup before you commit
Exactly. You want to make sure they're financially fit.
to handle any challenges that come their way.
Okay, so we've checked their financials.
What's next on the list?
Another crucial factor is the management team.
Are they experienced?
Do they have a track record of success?
Are they aligned with the interests of shareholders?
A strong management team can make a huge difference in a company's success,
Right,
especially for SMIs.
which often have less room for error,
It's like having a skilled captain at the helm.
guiding the ship through rough waters.
Precisely. Then consider the competitive landscape.
What industry are they in?
Who are their main competitors?
Do they have a sustainable competitive advantage that sets them apart?
You want to invest in companies that are well-positioned within their industry.
And have a clear path to future growth.
So we're not just looking for companies that are surviving.
We're looking for those that are thriving and have the potential to keep thriving.
Exactly.
And finally,
Even though SMIs are generally trading at attractive valuations right now,
it's still important to make sure you're not overpaying. Look at their price-to-earnings ratio,
their PE ratio,
their price-to-book ratio,
their PB ratio.
and other valuation metrics to get a sense of whether their stock price is justified.
So even in a bargain bin.
You still need to be a savvy shopper. Got it.
Right. It's
Yeah.
all about being a smart and disciplined investor.
This is all great advice.
But I know analyzing financial statements.
And understanding valuation metrics can seem daunting to some people.
Any tips for making this process a little less intimidating?
Absolutely. Investing doesn't have to be complicated. There are plenty of resources available to help you.
Okay.
You can start by reading industry reports
Following financial news.
and even listening to podcasts like this one.
And speaking of helpful resources,
Don't forget to check out the AI Finance podcast on YouTube.
they break down complex financial topics in a way that's easy to understand.
And they're always sharing great insights.
I'm making smart investment decisions.
The link is in the description below.
Another great tip is to not be afraid to ask for help
Talk to a financial advisor.
or a trusted friend who has investing experience.
And remember, investing is a journey, not a sprint.
Start small,
Learn as you go.
and you'll gradually build your knowledge and confidence.
That's great advice. It's about taking it one step at a time and not being afraid to learn and grow.
So we've talked about SMIs
Their potential for a breakout.
and how to identify those high-quality companies
What else should investors consider?
as they explore this part of the market.
One crucial aspect we need to address is diversification.
Ah, yes. The golden rule of investing.
Don't put all your eggs in one basket, right?
Exactly. And this is especially important with SMIs.
Which tend to be more volatile.
By diversifying your portfolio across different SMI companies
Different industries.
and even different types of investments,
Right.
you can help reduce your risk and potentially improve your overall returns.
It's like building a strong team with players who have different skills.
You wouldn't want a basketball team full of centers, would you?
That's a great analogy. A diversified portfolio is a well-rounded portfolio.
Okay, diversification check.
What else should we keep in mind?
It's crucial to remember that investing is a long-term game.
Don't expect to get rich quick.
Be patient
Stay disciplined.
and focus on building a portfolio of high-quality companies that can deliver sustainable growth over time.
The market will always have its ups and downs.
But if you invest in companies with strong fundamentals and a proven track record,
Right.
you'll be well-positioned to navigate the inevitable fluctuations.
So it's not about timing the market.
It's about time in the market.
And building a portfolio you believe in for the long haul.
Absolutely. And one more thing I want to emphasize is the importance of staying informed.
Keep learning.
Keep researching.
And keep asking questions.
The more you know about the market and the companies you're investing in,
The better decisions you'll make.
so it sounds like SMIs, especially those dividend aristocrats and growers, could be a really interesting area to explore right now, like a hidden pocket of opportunity in the market.
That's a great way to put it. They offer this compelling combination of attractive valuations, growth potential, and the added bonus of dividend income.
I'm definitely feeling inspired to do some more research, and I bet our listeners are too. Before we wrap up, Anna, is there anything else you'd like to emphasize for our deep divers? Any final words of wisdom?
Just this. Remember that investing is a personal journey. What works for one person might not work for another. It's all about finding investments that align with your individual goals, your risk tolerance, and your time horizon. So do your research, be patient, stay informed, and don't be afraid to seek guidance along the way.
That's such an important point. There's no one-size-fits-all approach. It's about finding what works best for you. And hey, if you're looking for some extra support on that journey, be sure to check out the AI Finance podcast on YouTube. They've got a ton of resources to help you navigate the world of investing, including those meme coins we mentioned earlier. You can find the link in the description below.
Absolutely. The more informed you are, the better equipped you'll be to make those decisions.
And that's what the deep dive is all about, helping you make sense of the complex world of finance and investments. So until next time, keep exploring, keep learning, and keep diving deep. And don't forget to subscribe to the AI Finance podcast for even more insights. They've got another great video coming out soon, and you won't want to miss it.